how I'd invest in EV stocks right now isn't about chasing hype. It's about avoiding landmines. Nio, well, they're building a battery swapping empire in China. And Rivian is locking in billion-dollar deals with Amazon and Volkswagen, but neither company is profitable. And if you're not careful, you could burn cash right alongside them. In this video, I'm going to break down their financials, the visuals, and the exact metrics I'm waiting for before I buy either one. Stick around until the end because I'm going to reveal the biggest risk investors ignore and how I time my entry if things turn around. Hi everyone, my name is Rick Orford, and while I'm not a financial advisor, I have been trading stocks and options since 1999. I help investors like you cut through the hype to make smarter, more confident decisions with your money. And if you like this video and you're serious about growing your portfolio and want to avoid potentially costly mistakes, be sure to like and subscribe. It'll help others too, and you won't miss out on future insights. By the way, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insights and stock recommendations for investors of all skill sets and risk levels. And y'all know how much I love researching new stocks and finding the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times, and you can scan this QR code or visit fool.com/RickO to get your 10 stock picks right now. Let's start with Nio, and honestly, it would appear that the company has been on a wild journey. Founded back in 2014 with its headquarters in Shanghai, this company went public in September of 2018, right when EV hype was just starting to build. Today, Nio isn't just one brand. They've actually built 3 distinct product lines that target different market segments. The first is their flagship Nio brand, which focuses on premium smart electric vehicles, and this segment delivered impressive 14,593 cars in June of 2025 alone, last month. Then there's Onvo, their newer family-oriented brand, and these vehicles are designed for everyday families who want smart EV technology without the premium price tag. They've already delivered 6,400 units in June of 2025, and that's not bad for a newer offering. And it doesn't stop there. Just this past April, Nio launched its Firefly. This brand is targeting the small, smart, high-end EV market. Think of it for urban professionals who want something compact but luxurious. The market here is a bit smaller, but with 3,932 units delivered in June, it shows signs of promising traction. Overall, the company delivered over 72,000 units in Q2 of 2025. But perhaps the most innovative feature about Nio isn't their cars itself, it's their battery swapping technology. So instead of waiting 30 minutes to charge your car, you just pull up to the station and swap out your entire battery module in minutes. It's like a pit stop for EVs. Being able to swap out batteries also means they can be shipped to their customers as well. With the click of an app, batteries can be delivered and swapped straight to your doorstep. How cool would that be, right? Now, let's shift gears to Rivian. This is a completely different EV player. It was founded back in 2009, and today they're headquartered in sunny California. The company took a unique approach from day one. While everyone else was building city cars and sedans, Rivian asked, what about the adventure seekers? So they built EVs that can handle the outdoors. Not only that, Rivian is one of the few companies that are successfully producing commercial EV vans. And this puts them in an incredibly unique position because they can offer entire EV fleets to businesses looking to electrify their delivery operations. Speaking of fleets, February 2025 marked a huge milestone for the company. After an exclusive partnership period with Amazon, during which Rivian essentially used Amazon as a massive testing ground for commercial vans, they opened up their fleet offerings to other companies. And as a result, they delivered more than 10,000 units in Q2 of 2025, while setting its full-year guidance to between 40 and 46,000 units. Now, both companies may be in the EV market, but as I said, you can see the differences in the approach between the two companies. It's very easy to see, right? Nio is laser focused on China's booming middle class. They're offering premium sedans and SUVs for status-conscious buyers, while also rolling out family-friendly options to capture a broader market. It's, let's say, a multi-pronged strategy aimed at different segments of Chinese consumers. On the other hand, we have Rivian, and they're all about the dream of adventure. Their entire brand is built around the idea that electric doesn't mean boring, and that you can use them for weekend camping trips too. Both companies have substantial partnerships, with Nio partnering with Mobileye, and their collaboration is focused on the development of L4 autonomous driving. Currently, their L4 system is undergoing testing with the Nio ES8. Nio has also partnered with the CATL and the FAW Group, along with other Chinese automakers. The goal is to make their battery swapping technology an industry standard, and this is what we have to focus on for Nio. They're essentially trying to build an ecosystem where any EV can use their swapping stations, not just their cars. Meanwhile, Rivian scored a $5.8 billion partnership with Volkswagen, and this deal will help them develop subcompact cars, expanding beyond their adventure vehicle roots. They also have an existing partnership with Amazon, who placed an order for 100,000 electric vehicles to be fulfilled by 2030, another sign of Rivian's ability to meet their manufacturing targets. They've also partnered with AT&T, helping the telecom giant hit its sustainability targets by incorporating Rivian vans into their fleet. And this could also serve as a blueprint for other companies that want to achieve their sustainability targets as well. Now, let's talk numbers, because at the end of the day, that's really what matters for investors, and it's what drives the stock. I'll be using bar chart here, so if you want to follow along, scan this QR code, and you can access the stock profile page. Nio's been on quite a ride financially, right? They grew revenues by nearly 15% last year, with full year 2024 revenues hitting $9 billion. And that's solid growth in this market. However, and this is an important however, their net income came in at a loss of $3 billion. And that's actually about 4% worse than the previous year's loss and progressively larger than all of the previous years. So while revenue is growing, profitability not so much just yet. Their cash position is also worth noting. Cash and cash equivalents stood at $3.79 billion for the full year of 2024. And that's a 30% decrease from 2023. So they're burning cash as they expand. Rivian's financials is somewhat different. They've seen modest revenue growth, reaching $4.97 billion. That's a 12% increase. But here's the encouraging part. They're narrowing their losses. Their $4.7 billion loss represents an improvement of 12% from the previous year. Now, let's be real about the risks here, right? Because there are definitely some for those owning the stock. As for Nio, the competitive landscape is brutal. They're locked in an intense price war with BYD, the absolute beast of Chinese EVs. BYD offers vehicles at every price point imaginable, which forces Nio to compete on price in a market where they're trying to position themselves as a premium. That said, Nio has been mitigating these risks by expanding into 7 new European markets, where they intend to showcase their Firefly and Nio brands. Rivian has a somewhat easier time in the US market, where consumers are more willing to pay premium prices for unique offerings. But they're not without challenges either. The elephant in the room for both companies are tariffs. The ongoing tensions between the US and China could dramatically impact both companies' growth plans. Sure, the politicians keep saying the deal or a deal might come soon, but the reality is that tariffs often end up being passed to consumers through higher prices. For Rivian, the tariffs can impact its supply chain and increase component costs. For Nio, well, the continued economic war could mean selling to the US, the second biggest car market globally, well, is off the table in the foreseeable future. As EV adoption grows but remains in its early stages, consumers are more price sensitive. Consequently, a sharp price uptick could lead to significant setbacks for both companies' sales targets. With both Nio and Rivian trading at low price levels today, it's tempting to see them as bargain buys. But here's why analysts have rated both as a hold, and I think they might be right. Neither company is profitable yet, and that's the hard truth. There are promising developments. Yes, Nio is expanding their footprint and Rivian's strong partnerships are there, but neither company leads their respective markets. BYD dominates in China, while Tesla is still the number one in the States. My verdict is to wait for at least a quarter or two of positive net income before jumping in on any company. The good news is that with Rivian's losses narrowing in recent reports, that milestone may be just around the corner. But until then, let's just say patience is a virtue. So that's my take on Rivian and Nio. But what do you think? Are you buying into any of these companies? Do you have any questions about the comparison? Or maybe you have a suggestion for a future topic you'd like me to cover. Let me know in the comments below. And of course, while you're there, if you like the video, don't forget to like and subscribe. It'll help others find it as well, and you'll never miss any future insights. Thank you so much for watching, and I'll see you next time.